bull markets climb a wall of worry. And I don't know how many people out there right now are worried, but many are, and rightfully so. I'm not that concerned in the longer term. We're in a situation where this bull market's going to try to shake off the weak hands.
Hey everyone, this is Elijah K. Johnson with the Miles Franklin Market Update. And with us today, one of our favorite guests, David Morgan. He's one of the top silver experts and he's host of the Morgan Report. David, thank you so much for joining us today.
Elijah, it's great to be with you. Thanks.
Fantastic. Now, over the last week or so, we've seen quite a drop actually in the metals, both gold and silver. What is your take on what's happening right now? It seems quite interesting. Like some reasons we can kind of point to maybe is the vaccine, people hopeful for the economy then. And then also one thing that doesn't make sense is that the dollar is also falling. It's at a 2-year low. So wouldn't that push precious metals up? So kind of mixed signals and reasons. So it's a little unclear, why are gold and silver falling right now?
Yeah, that question is, asked probably more than any other, why? And to really get the answer why, you'd have to interview each and every person that's selling, why they're selling. Maybe it's a tax thing, maybe it's they've lost their job, they need the cash, maybe it's, whatever, medical bill, buying a car, it could be other things. But the main point is there's more selling pressure than buying pressure, therefore the metal price is going down. Is that in the physical market or in the paper market? Undoubtedly, it's in the paper market. However, that doesn't mean that it's not spilling over in the physical market. It is somewhat. To what level, that's hard to determine. So it's selling pressure. Why is it going down with the dollar? In fact, the late, great Ian McAvity, who I greatly admire, I don't know how long he's been deceased now, but I really enjoyed him. He had a fabulous sense of humor, wrote a great report, and we traded letters for years. And he would, in the earlier days, take a gold chart and a dollar chart. And he would use, actually in those days, it was a vellum, believe it or not. Most of the people listening probably don't even know what that is, but it was on an overhead screen, and he flipped the chart upside down and he laid the dollar chart on top of it and basically make his point that the dollar and gold are inversely correlated. So, but as much as it is correlated to the dollar, it's more correlated to the stock market. So let me explain. With the stock market making all-time highs, would that imply that gold should be making all-time lows? And the answer is no, not in this environment where you have such a vast amount of money printing that's hitting the banks and the assets primarily without getting to Main Street almost at all. Now it has been with some of these bills that have been enacted and mailing out checks and all that. It's a trickle really relative to the amount of money printing that's taken place already. So a bit about correlation. I mean, you can correlate anything. You can correlate sunspot activities to how many black cats are born. I'm not trying to be facetious too long here, but you really want to look for strong correlations. For example, silver is correlated 85% to gold. So that's a strong correlation. Anything at below, I don't know, pick a number, this is my opinion, below like a 75% correlation, really just throw it out. I mean, you can prove that, Pepsi drinkers are correlated to sunspot activity. I mean, you really got to use your head, some common sense on what these correlations mean. Coming back to the point, stock market all-time highs, you would expect gold to perhaps be challenged here. Most of the algorithms are looking at that metric. They're saying, hey, look, stocks are going up, gold isn't. Let's sell gold and buy stocks. They don't think, they move on data. That's what the data is showing. So you get kind of a self-fulfilling prophecy. I think I nailed that one, Elijah. If not, come back at me.
And I guess definitely, no, I think it is important to know that, the overall reason, there is not necessarily an overall reason why markets are moving one way or the other. It does come down to individual circumstances, why people are selling or why people are buying. With respect to where we are in the bull market, is this the time people should be giving up, or is there a lot of upside in the years ahead?
Well, one of the things I've talked about again and again, and it bears repeating because it's extremely important, is that bull markets climb a wall of worry. And I don't know how many people out there right now are worried, but many are, and rightfully so. Let's say at the level that silver was roughly, I'm going to say 28, 27, 28 in that range. And it stayed there for quite some time. And on top of that, the premiums on silver physically were extreme. In fact, more extreme than they were in the 2008 bottom when there was about a 30% premium on silver. Some places and some cases, quite a few actually, there were premiums that were in that range, if not more. So there were people that were looking at a $27 silver price and paying, $6 premium. So you're paying, $32, $33, $34 per ounce. And now you're sitting at a 22 roughly silver price. And all the dealers in the world are going to pay you pretty close to spot, whether it's a silver eagle or a silver round. The eagle isn't going to carry a $6 premium on the sellback. So now they're worried. And again, to repeat, rightfully so. I'm not that concerned in the longer term, but on the short term, especially if you over leveraged or you bought on time or used your credit card or some of the things that people do, and you thought at 27 silver, it's only going to go to 30, 35 and end up at 40 or 50 at the end of this year. I basically told our members that are paid subscribers that didn't see that. I didn't see the September closing down the COMEX and it was all over and all that stuff. I said that it was probably going to drop and reconsolidate, which it did drop and reconsolidate. Now it's dropped again. It's going to reconsolidate. Very typical of markets, especially, I would say especially the metals markets, very typical of commodity markets. There's terms for it. It's called back and fill, or it's called it's called consolidation. So markets that get overbought for a while will back off and consolidate before the next move. And sometimes that's, 3 steps forward, 2 steps back, which is a pretty good analogy for silver. You went from the $12 spike low all the way up to almost 30, and then it stepped down to 28, then it stepped down to around 25-ish, and then it's now stepped down to 22. But if you look at a staircase, 22 is much higher than 12. So, 3, 4 steps up, 2, 3 down. And I think that's a good analogy.
Now, we do see that like 21 level, it went a little bit below 22. Now it's a bit above that. I know the 21 level is pretty important for the silver price. Do you see it going below that?
Well, I've been burned so many times trying to call bottoms in silver, and I've gotten a lot of flack, and that's fine. I mean, I pretty much can take it. I've been really good on the tops. Bottoms are tougher, at least for me. And so the real answer is silver could do anything, especially on a daily basis. I mean, that $12 spike, if I would have put a bet that you'd see silver hit 12 in 2020, and you would have asked me that in 2016, I probably would have bet pretty heavy on the fact it couldn't. But on the paper markets, almost anything can happen, especially intraday. Normally, those anomalies don't take much time. In other words, it's not going to stay at 12 for the rest of, into eternity. But they can occur. So with that in mind, I'll say I don't know. Could it get to, an $18 spike or something like that? The answer is yes. The other part that's really important to understand is unless you're in the futures market and you got a trigger on your account, the ability for the average person to buy at that level is almost impossible. Yeah, they'll see it they'll see the print. It does mean that some paper trades took place. A dealer is going to mitigate the volatility by keeping a huge premium on the product. So even though it might be 18 in the paper market, they're not going to buy or sell at that level. They're going to build in a premium so they don't get burned. They know what silver can do at times, so they're prepared for those type of things. So that's basically it.
I guess getting back to the bull market itself, where do you see us moving from here, kind of a big picture view?
Yeah, I'm still convinced we're in the third leg up, and that's the most exciting. It's also the hardest to hold on to. As I said earlier, Elijah, we're in a situation where this bull market's going to try to shake off the weak hands. Those people that just can't hold on. Those people maybe that bought, 28, paid a $6 premium and used their credit card to do it at 18% interest. And that's unfortunate because they're actually making the correct move. They're just doing it on leverage or maybe overextended. And, that happens. I mean, people are people, but that's an example. But overall, and it's not faith, it's basically how markets move. So I do still think, based on both fundamentals and technical reasons, unless there's a much bigger breakdown in both these markets and confirmation comes where gold confirms silver or vice versa, you get back to the, let's say, gold silver ratio of like 125, 130 again, I'd certainly have to reevaluate my premises. And then I'd also have to look for confirmation in like platinum, palladium, even though they're industrial metals, they're still metals and they're still extremely rare. Although they're much more tied to the industrial sector than money, they're still an important part of the complex of precious metals. So I would say, I'm willing to say I'm wrong, but so far no data has indicated to me or fundamental facts that we're out of the picture here. It's just, it's really tough to climb that wall of worry. I mean, people are worried and rightfully so, but it's going to be like that pretty much all the way up. Once you get into the mania euphoria stage, which is at the end of the cycle, which if you look at Mike Maloney's work from a few months back, he forecast, it's just I don't even know when he used the word forecast. He showed mathematically where I think it was November 2023. And I think that's probably a good ballpark figure. But before we get to that level, there'll be a lot of people that are silver believers that become non-believers. There'll be people that will get in and get out. There'll be people that will trade to make a lot of money. There'll be people that will trade the ratio, make a lot of money. There'll be people that buy but can't hold. So there'll be a lot of factors until we get to that final high. And when we get to that final high, and I say that's it, and if hopefully I'll catch it, I plan on selling into strength, so I don't plan on getting the exact top. But I'll probably become one of the most hated people in the silver world at some point by few or several. Because when it hits the mania phase, people will say, he's working for the Illuminati, or he's a banker at heart, or he's given up. His ideology was so strong, I believed him for all this time. But the fact is that even gold and silver can get overvalued. And when they are overvalued, it's a good time to look at how to take profits. And that's going to be very difficult, perhaps, because we may not have an asset class to get into easily. We may not see that real estate at a bottom or the stock market at a bottom or particular cryptocurrency or biotech or nanotech or robotics or all the things I'm thinking about and looking into, new energy, all these things may not be that evident. So it may be a tough call. But nonetheless, the call will be made, and I hope and trust that the vast majority of people that follow the sector, not just me, I mean, there's adherents to, Bill Holter and Jim Sinclair and James Rickards and, so Doug Casey and Mira Katusa and Ted Butler and, Andy Scheckman and on and on and on. I mean, it's not, a me movement. It's a basic philosophy about honest money and honest financial system and how that benefits honest money for honest people. And if we had some honesty throughout the system, we would certainly have a better situation for all involved. At least that's what history shows.
And one of the things that has really been an interesting thing that's happened obviously in the last couple of years, and we've talked about this, the emergence of cryptocurrencies, and it's kind of taking the stage as an alternative to gold or a complement to gold, right? To gold and silver, kind of another pseudo sound money. People don't exactly know if it's going to be that or not, but it seems like at least amid this COVID crisis, it's been rising quite a bit. It's almost near all-time highs, back around 20,000. What is your take on what's been happening recently with Bitcoin and other cryptocurrencies?
Well, Elijah, I'm actually sitting down to write this month's editorial for the Morgan Report, and one of the main themes will be that Wall Street's behind Bitcoin now. So you constantly hear Bitcoin is gold 2.0. It's the new gold. It's modern gold. It's gold without baggage. It's an interesting thing that the Bitcoin coin, which of course doesn't exist, is a picture of a coin, a icon, a digital image of a gold coin with a B on it. For most, in most cases, I mean, that icon's been out there for some time now. So I find it interesting that even in the cyber world, that it needs to be equated to gold. It certainly doesn't. It's not gold. There are two different properties. One's specie and one is something that's requiring energy to be constantly maintained. Hugo Salinas Price wrote an article, and Hugo and I don't agree on the crypto space, but I respect the man a great deal, and he's taught me a great deal. But what he points out is a fact, so this is not an argument. That, if the internet goes down, what good is a Bitcoin or anything? What good is a load coin that I, think is worth owning as an adjunct to physical silver or gold? And no one can argue that. I mean, if the internet goes down, then what cyber currency is going to have value? And the answer is zero. Is the internet going to go down? Well, I don't know. He makes the argument that during a all-out cyber war or a physical war, or the two combined, where you have, a war break out between us and China as an example. One of the first things that could take place would be a disruption in internet service. So there's something to be aware of. Is it going to happen? What's the probability? I don't know. I'm not a statistician. Ask Jim Willey to do the stats on that. I don't know what the probability is. It's not very high, but it exists. So the main point is that Wall Street's behind us. They're going to push the holy living heck out of it. And they're going to push and push and push and push and push. And I think one of the ways to get people that are familiar with the precious metals or involved in the precious metals to move out of that sector and into Bitcoin is to push and push and push and push. And we're already seeing it. So there'll be a lot of people that are waking up to the fact that we're in probably the midpoint of a currency collapse. And during that currency collapse, people strive to protect themselves. And then they don't really think through what's the best way to protect themselves. They go with what they're taught to believe. And what they're taught to believe is that Bitcoin is gold 2.0. And they're going to get inundated with that from all angles. It's not just going to be Wall Street. They have subtle ways of doing these things. So that's where it's going to go. I think, if you're savvy, you can certainly trade it. Is it a long-term trend? I don't think Bitcoin's a long-term trend, but I haven't made up my mind yet. I do believe that the blockchain track and trace everything is a long-term trend. And again, there's two problems that most people don't address thoroughly. One is the security issue, and the other is adoption by the general public. On the security issue, I'll just give one and keep it anonymous, but one of my members wrote me recently about a point in the Morgan report he wanted clarified, and he added on that he's given up on greed because he had, and I forget the number, so I'll make it up, but it was substantial. I forget, 1,000 or 10,000 Bitcoin at Mt. Gox, and he lost it all because Mt. Gox failed. That was you could call it anything you want. To me, it was a security issue. I'll leave it at that. I'm going to make security the issue. Whether Mt. Gox was security or not is rather immaterial. The second point is adoption. I listened to an interview on another channel like yours and this guy's somewhat biased like me because I lean toward any alternative currency that will disrupt the control that the banking elite hold over the population at large. So I'm for that, generally speaking. But he talked about having to get into the game and what it took to, log on, take a picture with a newspaper that showed the correct date, give all this information, then go in and buy it. And then you can't keep it on there because of security. So you got to take it off and put it in a paper wallet and get this Trigger thing and put it in that. He basically outlined how cumbersome it is. And a lot of people in my age group, I'm not saying your age group, Elijah, just find it like rough, tough to do. But as you know, we have got the platform set for Wall Street to push it hard because now you can go through PayPal and you can do it. Now you've got ETFs that can do it. And now, so you've got a lot of adjuncts to the basic idea of Gold 2.0, where it's very easy for someone to just get on their trading account, press their mouse, and be involved. And that's what it took for Wall Street to really want to push hard, and they will.
Well, David Morgan, thank you so much for your time today. Before we let you go, did you want to share with the viewers where they can find you if they're interested in learning more? And also, any last thoughts you'd like to add?
Yeah, I'd like to add that the best thing to do is go to themorganreport.com, and I have a free newsletter as well as a paid service. Just get on that. And then also on the blog, I would like to suggest that everybody that sees your show, Elijah, looks at the blog a 3 times a week. And then if you go on the top of the blog, there's a bunch of icons. One's for YouTube. If you click on the YouTube channel, move over to the community. And in the community, I post what I think are almost imperative videos to watch to gain further education in many of the most important questions of our day. I don't have time to redo them. It's part of what I look at, and I look at many more than I post there, but the ones that I feel are the most significant, I post there. So it's kind of for weekend viewing. I mean, some of these are fairly lengthy, but again, they're almost imperative, at least from my perspective, to take a look at these. So go to the YouTube channel. You might subscribe. I don't know when I post to the community if that shows up or not. I don't know. I hope it does. But look at both sides. I'm really big on trying to look at both points of view. Do I accomplish that always? No. But I'm not unaware that there's usually 2 sides to every story. And usually it's, there's 3 sides to every coin. I forget it. I think it was Frank Holmes that talked about that. You've got the obverse, the reverse, and you got the edge. And usually the truth is hanging in the edge, looking through both sides. So I'll leave it there, Elijah. Thank you.
Awesome. Well, David Morgan, once again, thank you so much for your time, and God bless.
God bless you.